Hello everyone, Thomas Wood here with Basecamp Trading, and we're going to take a look at the next video in the Intro to Trading series. Today we're going to talk a little bit about candlestick charts and what we call OHLC, which stands for Open, High, Low, Close charts. So with that being said, make sure you like and subscribe if you haven't already done so. That way you can stay up to date with all the latest videos as they come out here on YouTube. But let's go ahead, dive in here and talk a little bit about the differences between OHLC and candlestick charts. Now, these are the two primary types of charts that we use when we're trading the markets. All right. Now, they both show the same thing. So one thing you need to understand right off the bat is that a price chart is a price chart. All right. They're displaying price. So the market moves where it moves. Changing the type of chart does not change the direction that a market moves. Okay. It doesn't change how the price comes out or unfolds. Now it's just displayed differently. So what we have on the left-hand side is a candlestick chart. And this is what most people are aware of or I've heard about, and that's candles and Japanese candlestick trading and how that works. But there's a couple different parts here. The first thing you need to understand is a green bar is an up bar. That means it opened lower than what it closed at. Okay? So if we have a green candle, that means that bar opened at the bottom of the body, and the body is just the wide part of the candle, and then closed at the top. Okay, so for example, that bar there, it opened down here and then closed up there. Now the exact opposite goes for a red candle. If we have a red candlestick, that means it opened at the top of the body, which is the fat part of the candlestick, and closed at the bottom. So for example, this candle right here, we opened at the fat part, the top of the fat part there, top of the body, and then we closed down here. So on that day, the S&P opened and went down and then closed down there. Now there's two different parts to the candle. Once you understand that green is up and red is down, there's two different parts we look at. There's the body, which is the true range. That's how far, that's the distance between the open and the close. All right. And then there's the wick. The wick is the little line that you see sticking above the top or the bottom of the body. So you see here how we have a wick sticking to the upside and then a wick sticking to the downside. That's the total range that that bar moved during that day or during that bar interval. And again, just like we talked about with line on close charts, you can do this on any time frame chart. So in this case, let's take this candlestick right here. It's got that long wick to the upside. The market opened here. It went all the way up, came all the way back down, and then it closed just about right where it opened. All right. Now the same thing is shown on an OHLC or open, high, low, close chart, which is what we have over here. This is OHLC. So there's four main parts to an open, high, low, close chart. There's part number one, which is the open, part number two, which is the high, number three is the low, and then number four is the close. So the way that these bars work is we open with the tick on the left-hand side. The little mark on the left-hand side of the bar is where that bar opened. The range of the bar, so the wick that goes both directions, that's the high and the low. And then the tick on the right-hand side of the bar is where that bar closes. So you can see if we had, for example, this OHLC here, it would look like a candlestick chart similar to this. Okay. These two things are the exact same, showing us the exact same information. All right, so when we look at an OHLC bar, we'll go back to that one that had the long wick. Remember, that's this price bar right here. We can see the tick on the left, and then it goes up, down, and then the tick on the right here is where it closed. And that bar looks just like this, which is the exact same as this candle over here. All right, so those are the two primary types of price charts that we use when trading, when we're doing technical analysis. Again, candlestick bars on the left, open, high, low, close charts on the right. They show us the exact same information. That's the most important thing to understand, is they're showing the exact same price data. We can see it the exact same way. It's just displayed differently. All right. Once again, make sure you like and subscribe and stay tuned, because we're going to be going through more different types of candlesticks or different types of price charts and ways of displaying price. And we'll also start talking about things like support and resistance and trend, etc., getting you into the more in-depth into the details of different ways to trade with this whole intro to trading series. But that's it for today. And until next time, everyone, happy trading.